Good afternoon and welcome to the Blue Line Metals Edge here for Thursday, September 1st. I'm Phillip Streible, Chief Market Strategist at Blue Line Futures. You're watching this on YouTube, be sure to like and subscribe to our videos. And then if you need additional information, go to bluelinefutures.com. Or if you'd like to see any of the charts, any of the reports we have, shoot an email to info@bluelinefutures.com. We love to share some of the information, some of the different trading insights we have. We've got a lot of different research reports that we put out, and we build onto those. So looking at markets across the board, going today, there's no place to hide. Volatility index up, it's screaming to the upside. You've got U.S. equities just getting hammered. The dollar index surging. This has got to be it's going to be north of 20-year high because we broke through those 2002 highs. So got to look farther back on historical charts. Year to date, couple things standing out. A lot of the metals, long metals only accounts, those people, they've been hit pretty hard. And you can see silver down 24%, copper down 23%. Those are really interconnected metals. So if you're long silver, you're basically essentially long copper. Look at platinum, broke through 800 today. Silver, it looked like it was going to retest 17. Gold broke through 1700. But you can see that gold is performing much better, down only 6.69% on the year. So it's unfortunate that it's down, but it's at least been a better metal than things like silver because of the connection to the copper market. So a couple things standing out, a lot of mixed data, a lot of mixed messages coming out. Saw that in China, they locked down 21 million people in this city right here as they're battling COVID again. So that's going to hammer that copper, that platinum, the silver market. And then this news, I really thought would have supported the gold market, put the pressure on the equities. But China shot down a drone, first time off the Chinese coast here. So this could really escalate. This could get gold going back up again. So we'll see what happens right there. We're going to want to keep an eye on that. So looking at some of these other things here, we've got getting into the report here. We did have a bunch of economic data here all come out. This was what really hammered the markets. It was this ISM manufacturing PMI. It came out hotter than expected. Hot data is going to put pressure on the market. It's going to continue to cause the Fed to be extra hawkish, and that's why this market is continuing to sell off here. You need weaker data. So that jobs number that comes out tomorrow, that's got to be, you really want to see weaker data. You want to see this here, what's the estimate? They're forecasting 295. We get a number like this again, that's going to be bad for the stock market. I'm telling you right now, that dollar is going to go screaming. So you want to see this number come in line with expectations or be lower coming on tomorrow if you're on the long side of things. Looking at markets across the board, energy is down a couple dollars here. Probably going to be throwing some stops in on the long December crude right around this $84 range. If we break down and we start to crash there, we're going to want to be out of it. Platinum dip below 800. You got copper breaking through. It's breaking through that support, that previous support right here. It's actually on it right now. Gold 1708 did punch through 1700 for a moment. It's probably going to bounce off of this bottom here. That's like that bottom 1685 goes back the last few years, and that's been a kind of a hard bottom for whatever reason. And then, like I said, U.S. equities really just getting hammered. You can see the NASDAQ punch right through that 50-day, and it's been going down, and it could go down actually a lot more from here. So I did send out the refresh ranges. So when we see the market break key levels of support or resistance, like how the dollar is, our algorithm will update those already for you. And when I see 2 or 3 or 4, if I see a lot of people trading in these markets, we're going to shoot those out to you. So getting into the report, we did have that economic data. It's going to be the factory orders and the employment report tomorrow that we're going to keep an eye on. I won't be doing a video. I'll be traveling to Atlanta tomorrow. So if you need anything, give us a call. Trade desk fully stocked here. Looking at gold, that next support, 1685 as I identified. The system right now is short on gold. It got short at 1748. The stop is going to be right below that entry point here, that 1745. And I would tighten the stop up if you are on the short side of it because of that Taiwan situation and because of the volatility event we're going to see tomorrow. Looking at silver, it did crash from that oversold territory. It took out those previous lows. Now we're down. 1761 was the last when I did this update. The the system is short on silver. Unrealized profit loss, $1,100, going to be a little bit higher than that. Your trailing stop should be below your entry point now if you're on the downside of it. So this is something new that I put on here was an option insights. I did a basic write-up. So silver does have a seasonal tendency for the month of October to rally, and sometimes if it gets steam, it could go all the way to the end of the year. So we are putting on a very inexpensive call spread. It's like $650 to $750. It's the December 1850-19 call spread. So if you want additional information on that, give us a buzz. That gold-silver ratio, I backed this up a little bit more. It looks like it's going to punch through 100. This is when silver is drastically cheap once you start getting over in relation to gold, once you get over that 100 handle. So your copper, that's that previous support. You want to watch that. We might get some kind of bounce here, but unless China lifts those lockdowns, probably not going to happen. The other months, the system is short. March copper, May copper, short September copper. So this particular one on December, it's not short, and it'll probably get short on this breakdown here in tomorrow. So platinum, it did come down into that area that I thought it was going to, just below that 800. The system is short on platinum right now. It's up $1,400. That stop loss should be below your entry point at that 850 level if you're taking the short side of the trade. And then also, remember on short, when you short things, don't short and stay short. Trail your stop, because this market is highly driven and highly emotional. And you can see, just looking at our quad map here, the rest of the year, we're going to be in this deflationary environment, which has increased volatility, and it's going to have bigger ranges on a lot of different markets. So the NASDAQ, this should trigger a short here today. I wouldn't try and put the short on at the low. Wait for some kind of recovery, maybe another test of this 50-day moving average, and then you consider putting your shorts on there for the NASDAQ. The system is already been short on the mini Dow for the last 3-4 days. Looking at the Fed watch tool, no big jumps here. It looks like it's about in line with expectations. They're waiting on that number tomorrow. Like I said, number comes out weak. You're going to see this jump up, and this will come back down. It'll be more 50-50. That 2-year, 10-year spread kind of backing up here. But remember, we're just monitoring that. If it goes back above positive, then you're going to see a change. You'll start to see that people will be talking, hey, we're no longer looking at a recession. So dollar index punched right through. We're up pretty big on the dollar right now. The dollar breaking through 110 could be the next stop, 112 here. So the system is long on the dollar. You're going to want to move your stops up probably to your entry price on the dollar right now. And then crude oil, this is what I'm talking about. We're punching back down. We're coming across where this key level of support is. If we start getting into here, we're probably going to want to get out of that trade and then wait for some kind of recovery. So system's long, down $672. That's on a 100-barrel crude oil contract. We are scaling in, so we're trying to bring our average price down. This OPEC watch tool from the CME, I'm a little surprised. The significant output increase keeps gaining steam, and the decrease has lost everything. And that's contrary to what OPEC said back a couple weeks ago. They said they were considering cutting production. So if they're working with China, China's going on lockdowns, the whole economy is going into a deflation, the global economy. It makes sense that with prices coming down, they might not boost their production. So I just don't see it. I changed the fonts on some of these heat maps to make it a little bit easier for you guys to see. And then your correlation matrix here. This was higher, dollar gold. It was up in like the 80s yesterday, the day before. So we're going to see this jump back up here with that breakout move in the dollar and that sell-off in the gold market. So if you have any questions, you want to talk more, if you want to add that silver call spread going out to December in your account, give me a buzz, 312-858-7303. Remember, futures option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.